What's going on, traders? Welcome to FX Hangout. Please make sure, if you haven't already, like and subscribe to this channel. Make sure if you have any questions, make sure to leave a comment below. And if you stick to the end of this video, I'm going to be showing you ways on how you can utilize some of the information that you are learning from FX Hangout, so that way you can become a profitable trader and expand your trading knowledge to the next level. Stay tuned. What is going on, traders? So today we're going to be talking about supply and demand and how to find that in the market. So when I'm trying to look for supply and demand, I normally start on the 1 hour chart, and that's what I normally try to recognize my supply and demand. But for those that don't know what supply and demand is, okay, so supply and demand are major points. I'm gonna keep it as the simplest as I can. Supply and demand is where you find the major rally points in the market, where the market starts to rally and just, shoot out and start a major trend. All right. So when you're trying to identify support and resistance, not support and resistance, but supply and demand, you need to know what they are. So when you are identifying the lowest low or the lowest point before a breakout, that is considered your demand zone. So in other words, this low right here would be a demand zone. All right. Anytime when you get to your highest point before a huge breakout to the downside, that will be your supply. All right. So let me label that right there for you, so that way you know. All right, anytime when you are trying to identify a bottom before a rally, it's going to be your demand. All right, and anytime when you are identifying your highest point before a breakout to the downside, it is your supply. All right, so that's how you pretty much label it. All right, so looking at this, right, I labeled major key part before a breakout. Now, for me, of course, you're going to see a lot of areas on here where you could have said that. So one area could have been this area right here. So I normally like to look for a breakout candle, like, this one right here. You see, let me zoom in. See how we had this big blue engulfing candlestick, a bearish candlestick, right? Going to the upside, and as soon as it did, it just shot off. We could have went over here. Let's go to a better one. Let's go to the one right here. All right. And you normally want to place your triangle on not the engulfing candle, but the candle that it engulfed. All right. Because that lets you know the starting point of that. That was the last point before that engulfing happened, and then the breakout session was created. So if we look over to previous time, we can see where the market has hit prior to that and what bounced off, because that was a major area in which it was a hard time for the market to break. And that's what you want to find whenever you're looking for supply and demand zones. You're trying to find those major points before the market decided to do a major breakout. So anytime now that I told you that, you can probably clearly find some more supply and demand areas, like this area right here. This was a major area before the breakout, so you could even said this area, right? Then draw it all the way to the left. And of course, what I do also, just to add a note to self, when I'm trying to grab that area, Notice how I get the whole, I get this candle, I get the whole body of the candle and also the wicks, those little pin areas too. I get both of those areas, all right, to cover that. Because before the after this candlestick, because after that candlestick was that engulfing candlestick, and that was the breakout. So that's what I want to get, those major breakout areas. All right, and if I zoom and look to the left, what happened? That was the area that what price had respected. It went up, and in order for it to break, it had to force itself. It had to push itself. A lot of times, what you'll find with these major supply and demand areas is that the market will struggle a lot to pass these areas. Either the market will have a hard time breaking it, and it will just bounce off of it and continue the opposite direction, or it will have to force itself through. Like, it's a hard, think of supply and demand as a hard floor or a hard roof. And in order for price to break that, it has to force itself to break it. So every single time when you see these breakouts to try to break that major supply and demand zone, it will always force itself through. So look at this every single time. So we got these areas right here. And just by going off of the left side, you can see that once the market has passed just the couple points that we have measured off, price had to force itself down, right? Break that area, pulled back to the area, respected it now because it didn't have enough strength to go back up. But now it acted as resistance to go right back down. All right. Now, what does this add up with support and resistance? Well, when you utilize this with confluency, and say, for instance, you had major support and resistance in this area, which you do, right? On top of a strong supplier demand zone, that will give you more confluence of letting you know that now you have a support and resistance, but now you have an even stronger support and resistance because of that demand zone, right? So now you know that that roof or floor is even harder to break. So once it is broken, you have to know that it's going to be even harder for it to go back in that direction. As you can see right here, once it broke, it was too strong. It was still too strong for the market to continue back up. And it took so much force for it to break. So when it finally broke it, what happened? It didn't have enough energy to go back this way. So what did it do? It acted as resistance. So once it acted as resistance, the clue that it was not going to go back up that way was what? The wicks, the exhaustion. It was too tired. The market was too tired. And the only way that you would execute off of this is just by simply waiting. Once you had that engulfing candlestick right here, once you had that engulfing candlestick closing underneath that supply zone, that was letting you know that, hey, this thing does not have the energy to break this strong noun supply zone. What it was once demand, but now supply zone. You see the wicks, you see the engulfing candlestick in that direction. You already know that's a strong demand zone. You know that this market is not going to break that, and you know you could take the sell. All right. So that is what you look for on supply and demand. So again, what to recap what we look for. When you are drawing up supply and demand, you want to look for where the breakout started. All right. You want to look out where the breakout started. When the market decided to do its rally, right? So over here, that was the start. Boom. So we know that we want to go off of the candlestick prior, before the engulfing, and you labeled that, right? The next breakout, what was the next breakout? You could have even said, if you wanted to get super technical, you could even say that the next breakout was this area right here. I wouldn't have said it, but you can say that. That's fine. All right. Next breakout was here. Here, if you want to get that technical, but I wouldn't have got that technical. All I do is whenever I try to find my breakouts, I normally look to the left. I look to the far left to see, of course, to look to relevance to see, and I want to see where this lines up, where this matches up. So when I see that this was a great big breakout, I said, okay, yeah, I need to get this starting point. When I saw this next big breakout, I said, okay, yeah, that's a point that I need to get. You see how as soon as it broke out of this, it just shot straight up. I said, yeah, that is something I need. All right, even this area right here, how it just shot up, that said, okay, that's something that I need. I need to get that area. I draw it over, and guess what? Look how the market respects this area. Look how it did. Literally. It shows you how much respect it has for this. You see how once it broke here, it respected it. It went down, it bounced off. It had to force itself down to get through this area, bounced off. These are major areas. Now with supply and demand, you don't need a lot of supply and demand zones. You just need those major, like those major impact movement, right? Something like you had over here, right? Or right here, or right here. You know, you just need those major keys, areas. All right, and then once you draw them out, you'll see how price kind of still simulates and bounces off those areas right there. Okay, so again, when you're drawing your supply and demand, you just want to find those breakout areas. You want to find you want to focus on the candlestick prior, before the engulfing candlestick. All right, and then you just drag the whole body. You want to make sure that you get the whole body of the previous candle, like I did back here. You want to go from the wick of the body to the body. All right, so you want to get the wick included with the body, and then drag it over to the previous day, all the way over to the future. All right. And that's pretty much with supply and demand. Supply and demand, again, just to give you the definition, marks out those major hard areas where once the market hits, they have they have a super high powerful area that the market has a very significant problem breaking. So as I talked about in my last video with support and resistance, how on the day time frame marks out those key areas of consolidation. Well, the supply and demand helps out with that to tell you that these areas on top of the support and resistance is even major. So if the market does break it, then you already know that it's going to keep on going down. Or if the market does not, then you already know where it's going. All right. So it gives you that much more confirmation on understanding where the trend is going. All right. So that's the whole importance of this. So what I want you to do for your homework, I need you to mark off your supply and then your demand on the 1 hour. I need about 10 markups on that, and they can be on the same pair or they can be on different pairs. All right. And again, I want you to find those major breakout areas. You can put what the label is, which is again at the top, that's your, that's your supply. And at the bottom is your demand. Can't spell right now. But supply, demand. And you can do 2 areas if you want to, just 2 areas, or you can get all these areas right there, whatever you want to do. I recommend at least 2 areas and I just need to make sure that you understand what is supply and demand. So get 2 areas. And then on top of that, I want you to label this because this is so important. I need you to label. You can draw a line, and then in this back here, all right, in this back here, I want you to label your breakout. All right, label your breakout areas. So that way you know, and I know that you know that these are breakout areas. That's a breakout. I need you to recognize breakouts. Because once an area has broken out before, what you think is going to happen again? It's probably going to do the same thing, right? That is what supply and demand is about. That is what supply and demand zones are about. So you just want to label those breakout areas, okay? And try not to use the same pair, guys. Don't be that person and be like, I want to take the easy way out and use the same pair that he used. Don't do that. Don't be that person. You have to learn this. It's a part of the craft. It's a part about, doing what you need to do. So find those breakouts. And if you are on a pair where you're like, Agent, I really cannot find a breakout, move on to another pair that looks clear. That's what this is all about. You don't want to be trading something that's unclear. You want to find something with the clearest trend. If it does not look clear to you, you don't trade it, period. That's how you trade, okay? So this is all I want you to do. I want you to label your breakouts, label your supply and your demand. Oh, there that is. Label your supply and your demand. And you can even put an arrow on it. Go over here and put an arrow. Like, I need to make sure that y'all know this. All right. All right. And there you go. So this is going to wrap up this video. Hope this was insightful on understanding supply and demand. All right. I'll see you on the next one.